Amazon shares down by 3.6%. So basically guidance, the revenues at least, the bracket was above where consensus is. I mean, consensus is at the bottom of the bracket. But there's a big asterisk here with this guidance.
So it's the second quarter operating income guidance, which was $13 billion to $17.5, and the street was at $17.6. So that ratcheted things down. Okay, that's fine. But then you look at the quarter itself, 11.8% operating margins. I mean, that's pretty extraordinary, I think. The street was looking for 11.3. It's up from 10.7 a year ago. I mean, these are all good numbers. Yeah, you can nitpick here without question, and maybe Cloud disappointed a little bit, but I think you hit the nail on the head. I think that guide is giving people a little bit of a concern.
And drilling into that margin, operating income margin at AWS beat at Street, I think, by 350 basis points. So this profitable part of the business that we all know, some people say you get e-commerce for free, is part of the story. I think it just gets into Amazon has always had some cyclicality to it, and I feel like that's a term I know I've been using this week on Fast Money because I do think it's very important when we think about a week when we've digested not some great macro and we're trying to contemplate what's really going on in addition to tariffs. And I think in the case of Amazon, that's part of the story here. I do think that the e-commerce business, it's a secular trend. It's their business to control and dominate, I think. I mean, Walmart would say something different, but I think on AWS, again, growing cloud, and then they had this marketing business. So, I mean, I like it. I like it relative to itself on valuation. I think you have plenty of headlines that don't look great for Amazon, but I think in the medium term, you love this stock.
I don't think there's anything specific. It's just the nature of this market right now. We know macro is the big thing. Amazon's been an uptrend for the past 2 years. Yes. Amazon drops hard with almost every other stock starting in February. Yes. Amazon's ricocheted. Yes. And here it is sort of in the middle of the tennis court, if you will, no man's land.
If you were, I mean, did I just hear pair of twos?
It might just
sort of.
be that.
Which I learned just the other day was the worst hand you could possibly have, except for 5 random cards. I didn't even know there were 5 cards in the hand, but now I learned a lot that day.
Depends on what you're playing. No, but, pair of twos, but we talked about 2-7 offsuit being, you don't want that.
Yeah, I don't know what you're talking about.
Let's move on, guys. Okay, Mel, I'll do that. What all these stocks have in common, though, and the broader market does as well, the 50-day moving average crossed down through the 200-day. We've talked about this ad nauseum on the show, this death cross. All these individual names and the S&P 500 all have traded back up to the 50-day. Some have overshot it. Microsoft, for example. The question is, were those death crosses or that formation, is it strong enough to thwart what has been some good quarters? And to Carter's point, all these moves have gotten us back to a level. Is it, in fact, a pair of twos that you fade? We're going to find out over the next couple of days.
All right, let's get more on these tech results with Deepwater Asset Management's Gene Munster. Gene, great to have you.
Hi, Melissa.
Let's kick it off with Amazon, since we were just talking about that. You think the guidance is actually better than how the street is interpreting. Can you explain?
Exactly, Melissa. They typically come in at the high end of their range, and so you have to factor that in. Look at the high end. The high end was 2% higher than where the street is at for the June quarter. And that really is a powerful statement relative to the macro we're in. That's what I'm curious to hear on the call is like what was factored into that. Were they being conservative? Were they taking the current environment and running with it? Whatever that might be. But that piece on the operating income side, a lot of people looked at that as a disappointment. Again, you have to go to the high end of their range. That was in line with the street. So the way I look at this, they guided revenue up by 2% in a really tough retail market. So I see that as a net positive.